you beautiful entrepreneurs. Welcome to today's episode of Your Business Unleashed podcast. Today, we're going to be talking about the Lifetime Capital Gains Exemption. So the Lifetime Capital Gains Exemption is what every entrepreneur is looking forward to. It gives them the ability to sell the shares of their company at a fairly substantial gain and avoid paying a ton of tax on it, okay? And so this has gone up over the years. It was $500,000, it was $750,000. It's been indexed up since then. And there's a recent announcement in the 2024 federal budget, which is going to bring it even higher. And so every year there's a new limit on how much of this you can sell, how much of your company you can sell shares and be exempt from paying tax. It's called the Lifetime Capital Gains Exemption. So this is what every small business owner dreams of, one day selling their business, which they put their life into and building it and hopefully making it saleable. This involves considerable risks. So I think we should talk about that for a minute. So when you're an entrepreneur, when you own a business, you're putting a lot of risk on the line. A lot of us have our houses refinanced or mortgaged, or we have indemnities all over the place. We've got employment law to deal with because we want to make sure that our people are happy. And by the way, when something goes wrong, it's us that it falls on. These are huge risks that business owners take. Okay, and they're very, very valuable risks to the Canadian economy. According to Statistics Canada, there's 1.21 million employer businesses, and of these, 1.19, so that's 97.9% of employer businesses in 2021 in Canada are small businesses. Said differently, 97.9 of the job creators in Canada are small business owners. Okay, so that's huge. That's huge. Our tax legislation encourages entrepreneurs to take the risks of incorporating, investing in, and running a small business by exempting them on tax of up to, it's going to be, after this budget announcement, $1.25 million of capital gains that they receive when they sell their shares of a small business corporation. There's lots of different things that you need to do to qualify, or not to do. And there's an analysis that we run to make sure that the shares of your company qualify as QSBC, or Qualified Small Business Corporation shares. And at Aiken Henderson, we believe that the risks that these entrepreneurs take are worth it. The 97.9% of job creators in Canada should be entitled to some tax benefits for the risks that they're taking. So there's several risks and tests that the company has to meet, which I talked about a second ago, to make sure your shares are eligible. And so planning is really, really important. Some of the basics: your company must be a Canadian-controlled private corporation, which means it can't be controlled by non-resident individuals. The individuals must have owned the private company shares for at least 2 years leading up to the sale date. The capital gains exemption applies once in a lifetime and only to capital gains arising from the sale of these types of companies or farm or fishing property. It's not available to the sale of shares from corporations. So, for example, if you have a holding company and you're selling your operating company, but 100% of it is owned by the holding company, you can't get your lifetime capital gains exemption unless you sell the holding company, and the holding company qualifies as QSBC shares. So therefore, if you're selling the shares of an operating company from a holding company, you're generally not going to qualify you won't qualify for the lifetime capital gains exemption. So the maximum exemption that an individual can claim in their lifetime is currently, as of the date of recording this, 1.016 million, but it's going to 1.25 million on June 25th, according to the budget announcement on April 16th, and it's going to be indexed upwards annually starting in 2026. The lifetime farming and fishing exemption is $1 million going to 1.25 on June 25th. So, and then at least 90%, at the time of sale, at least 90% of the net assets in the business being sold must be engaged in active business at the time of the sale. So less than 10% of the fair value of the net assets can be passive assets. So you can't be sitting on a giant GIC or an investment account or a rental property that's more than 10% of the fair value of the company and expect to get your lifetime capital gains exemption. And by the way, that's a 50% test for the previous 24 months. So 90% at the time of sale, 50% for the previous 24 months. So there's several strategies that can be used to ensure your company shares fully qualify. And a lot of them require the advice of tax experts. So I recommend that you talk to your tax expert about this. So this can be tax accountants, lawyers, or both. Remember that every situation is unique and must be fully analyzed, and versus the cost of deploying these strategies. So we've set up really robust structures for our companies, or for some of our customers, with family trusts and lots of family members, and holding companies to hold real estate to make sure that the structure is pure for an eventual sale. The challenge with setting up these really, really robust structures is, while they're incredibly flexible and allow you to move money around the structure so you can purify things and you can sell what you want to and take advantage of your gains exemptions, the challenge with those is they're extremely expensive to set up. Not extremely expensive, but they're expensive to set up and to maintain. Every year, you're going to be paying us to maintain that company. So the professional fees of setting up a robust, awesome structure that gives you all the flexibility you want has to be balanced with the professional fees of setting up and maintaining that. And if you're killing it, if you're doing really, really well, you want to take a look at this. But if you're a smaller business and you're just growing, maybe it can be done down the road or whatever. But in order for a family to multiply the number of lifetime capital gains exemptions that it can receive, remember that's per family member, you might consider doing a restructuring and have multiple family members in the ownership of the Canadian controlled private company. Or maybe you want to consider setting up a family trust where the control of the company can be separated from the ownership of the company. So if you've got kids that you don't want involved in the ownership and the decision-making of the company, we can consider a family trust. The challenge, of course, when you allocate a capital gains exemption gain to a child or to a spouse, is that you actually got to give them the money. And so, if you sell your business for example, $5 million, and you've got 4 family members that are getting 1.25 each, well, you actually have to give them the 1.25 each, okay? And so, there was actually a court case out of Quebec where there was sort of a side deal where dad would get all the money back after he wrote the checks, and the court found that wasn't valid and allocated all the gains directly to dad. So you want to be careful of that. Okay, so let's talk briefly about the 2024 Lifetime Capital Gains Exemption announcement in the 2024 federal budget. It's going to be increased to $1.25 million from currently $1.016 million, and that will be effective for dispositions that occur on or after June 25th, 3 weeks from the recording of this episode, and then indexation will happen with inflation, but that won't start again until 2025. It won't. There will be no indexation in 2025. It will kick off again in 2026. And so how do you claim your lifetime capital gains exemptions? 4 easy steps, right? I say that sort of flippantly because it's actually quite hard to build a business and grow it to the point where you might actually be able to tap into your lifetime capital gains exemption. So first of all, you got to start a business. You got to incorporate that business. Next, you got to hire Aiken Henderson CPAs to be your accountant and help you make sure that everything's set up and maintained properly and help you grow your business. Then step 3 is to grow your business. And then step 4 is to sell your business with Aiken Henderson by your side. We're more than happy to help you look at this. We help a lot of clients sell their business. And so if you're considering a business sale or you have a growing business and you want to make sure that it's set up properly for eventual sale, contact us and we'll help you out with that and make sure that you're set up properly. So that's it. Thank you so much. We look forward to seeing you on the next episode.